Good morning, traders. In this video, I'm going to show you how to add to a winning trade, and I'm also going to give you an update on my swing trade with SPXL. The two are related. So let's take a look at the chart of SPXL. It did something very interesting this week and caused me to add to my winning trade with it. So let's take a look at what happened at the beginning of this trade. So we were in a trade back here. We took profit at the 50 MA line. We got stopped out of that trade, and then whenever that happens on this SPXL in particular, I enter when a daily candle makes new high. This is not something you could just apply to any stock or any ETF. You have to check the chart and see if this is something that has a high probability of working out. And then, as always, even if it does, make sure that you use the stop loss. My stop loss, I entered on this candle as soon as this candle broke the high of this candle. So I entered the stock on July 20th. And my stop loss on that day, while the day was trading, was at the low of this candle. So my original stop loss was 101.67. As soon as the price closes above the 50 MA line, then I move my stop loss up at the end of the day, and then I just follow it up each day. So right now, we are right here with the stop loss on this trade, and this is our current position. Our original position was down here at 105.26. So I'm going to show you a clip from my live trade recap video from this morning, and I showed, because I was going back and forth between my day trades and this swing trade to make sure that everything was set properly. So this will show you how I added to this trade. So the plan was, since the price came down and did not break the 50 MA line, it is bouncing off yesterday. That's what happened yesterday. Let's go back to this chart really quick for a second. So I was expecting the price to come down and then touch the 50 MA and stop me out, and then I would be looking for the next trade. But since that didn't happen, the price came down extremely rapidly over the past few days, as it tends to do periodically, and that's how I get stopped out of these trades when price comes down and touches the 50 MA line. And that's my way of protecting myself from a crash or a major reversal or something like that. Then I want to get out at that 50 MA line and then just wait and see what happens to see if things are going to reverse or not. If they do, and they give me confirmation that they're heading back up, then I get back in for the next trade. Otherwise, I just wait until another reversal. So what happened is we came down and we got very near the 50 MA, but we did not touch it, so I did not get stopped out of that trade. So now it looks like there's a possibility that this thing can continue higher. So I don't just want to sit by the sidelines with my original position size when this thing is going to take off, possibly take off and continue for a while now before it comes back down and hits that 50 MA line. So my plan, which is written right here, you can just pause the video and read that, basically says that if this candle ended green and, closed pretty high on the candle, which it did, being kind of a bullish signal showing that buyers were ready to buy back at this price and move the price higher, then I would place a stop loss order, not a stop loss order, a stop order at the break of this candle. So I'm hovering over this candle right now. The high is 115.78. So that means my stop order should have been 115.79. I could show you how I placed the order, just so if you're wondering how do you add to a trade. So I wanted to add one single share, because I only had 3 shares originally, so I don't want to move my average up too much. Depending on the number of shares you have, you might buy a lot more than just one more share. So anyway, I put in for 1 share buy order, stop order type. Stop price would be the break of that candle, so it would have been 115.79, and then I hit buy, and then it places that order ahead of time. You can see that in the video. So that's that order sitting out. I placed that actually the day before, after the market closed, and I knew, okay, that's going to be the high 115.78, so I placed the order right there. And the only way it gets filled is if on the next day the price actually comes up and breaks that level and hits that price of my stop loss. I keep saying stop loss, but my market order. So this is a market order. It's a stop market order. So what that means is if the price comes up and hits that level, that the platform turns it into a market order at that price. So as soon as 115.79 gets hit, the platform turns this into a market order at that moment, and then whatever price the best price is at that moment you get filled at. I got filled at 115.80, so I took 1 cent slippage, not a big deal. So that is a strategy to get in as the price is moving up. You do want to consider the volatility of the stock or ETF that you're trading. If it's extremely volatile, you could catch a lot of slippage doing that, but these things move pretty slow. There's a ton of volume, so I know it's a safe way to enter. I don't think I've ever taken more than 2 cents slippage, and on a stock of this price, 2 cents is absolutely nothing. So anyway, you could see my original position was here, 105.26. This was where my stop loss was as of, I guess, the market open today. And then once I got filled, then I have to cancel this stop loss order. So you just hit X, close the stop loss order, put in a new sell stop loss order at whatever price you want it to be at. I put it at just below where the 50 MA is because I was considering there is a possibility that I get triggered and then the price comes down against me and stops me out. If it came back all the way down, there's no way the 50 MA would still be at 110.81 as it comes down, because that's going to move the 50 MA downward. So I just kind of guesstimated where it might be if the price came down against me. And of course, I have an alert set. So if the price comes down near where my stop loss is, I can be notified to open up the platform and adjust it as needed. And you can see how my average changed because I added that one share. I was at 105.26. I'm at 107.90. So right now, if I got stopped out today, I would be making less money than I would have made with those 3 shares. But this is a very probable calculated risk, safe bet, I guess you could say, that I'm going to make more money doing this, and I know for sure I'm not going to lose money doing this. This is still going to be a winning trade no matter what, even if this thing turns around today and stops me out, which doesn't look like it's going to happen in the next 4 hours of trading. So let's take a look at the spreadsheet, and you can see what I'm talking about here with the so this is our original trade with 3 shares, and our original entry, or original position price, I should say, was 105.26. So originally, we had a risk of negative 3.42, right? Our first day potential loss was $10.80. And of course, we were not in that position anymore. We were right here before I added the extra share. Our position price, 105.26, number of shares. Our stop loss was somewhere around 110.50, and our P&L before we added this share was 15.72. So now we've added a share, and now our new position price is 107.90, and our initial stop loss is already above our position price. So that's the big difference between this additional share and the original trade, is that you're adding a share into a trade that's already profitable, and you calculate how many shares you can add without getting too close to your stop loss. You don't want to turn a trade that's already going to yield a return of, say, 2 or 3% into a trade that's going to yield a return of maybe 0.25% or 1% or something like that. So that's why I only added 1 share and not, say, added 3 more shares or something like that. Also, the stop loss would move higher and higher and maybe even make me unprofitable at a certain point. So now, our new risk is positive because there is no risk, basically. That's what that means is if we got stopped out today, we would actually make $285 off of that 1 single share, not off the whole trade. We could figure out now, let's say we got stopped out today at that guesstimate of 110.75 with 4 shares. So I can put in our new position price, which is 107.90. We now have 4 shares. And our stop loss is 110.75, I believe. So if we got stopped out today, we would make $11.40. So that's the only risk we're taking. Instead of making $15, we would be making $11. So we're basically risking $4 of our previous profit, potential profit, it didn't happen yet, to add to this winning trade that has a likelihood of going up. So this thing goes up about 30 cents every day, the 50 MA. So let's take a look one more time at this chart. So I'll show you what I'm talking about. I'm hovering over this candle right now, and look up here at the 50 MA. So the price is 110.53, and then over here it's 110.81, so roughly 30 cents, right? So we could guesstimate that if we close green today, then we go up another 30 cents tomorrow. And if we even got stopped out tomorrow, we can see what our P&L would be in that scenario. So tomorrow, the 50 MA should be somewhere around 111 and 10 cents, roughly. So let's go and plug that in and see what happens if we survive today. 111, whoops, and 10 cents. We're up to 1280. If we survive 2 more days, which is also pretty likely, 111 and 40. So now we're getting very close in just 2 days to where our previous profit is, or was, I should say. And then maybe after 3 days, 111 and 70. And now we're back to basically break even in a sense of where the previous trade was, because the previous trade was about to give us about $15 and change. And if we can eke out one more day and make it to maybe 112 per on that 50 MA line, we're already making more money, right? And then if we only had, let's say, so if we had 3 shares, I don't know if this is interesting anymore, but if we had 3 shares at that price, we would still be making more money with those 3 shares than the 4 shares, but after time. So the idea is that this thing continues for maybe another couple of weeks. That's definitely possible. This thing stays above the 50 MA for a month at a time, often after, it bounces. So that could definitely happen. In that case, we're probably going to be up maybe around the 114 level before we get stopped out. And now you can see that the P&L goes up considerably. And let's go back to the 3 shares. We'll keep that stop loss where it is. And see, I'm not sure if we're actually making more money yet. We might need more of a continuation than that, because our original price was 105.26. So yeah, we'd still be making more money off the three shares. But again, the idea is for a longer term continuation. So let's say we get to 115. So with the 3 shares, 29.22, let's put in 4 shares at the 107.90. And there we're already making more money, right? So if we can get up to 115 level, then this additional share that we've added will start to kick in and make us more money than we would have with that original 3 shares. Let me just double check that. So 28.40 there, and we were at 105.26. So 28.40. Actually, no, I'm sorry. Getting closer, but we still need more. 107.90, 4 shares. Let's see if we get to 116. 32.40. Let's go back to that 3 shares. It's the only way we're going to know. 32.40, 3 shares at 105.26. 32.22. So that's where we need to get. 116 is the threshold where this additional share is going to start making us more money. So let's mark that out on the chart, that 116 level. I already have a couple of marks on here based on risk level. So we've already got a mark right near there, but we'll put a special mark at 116. That's not the exact price, but it's right around that level, 116. Should make this a special color. All right, so if the 50 MA hits that level, which we can even guesstimate about how long that will take. They're on a trend line here. This is a guesstimate of where the 50 MA will be. Zoom out here. We can make it a little bit more accurate. So you can see how this is a good estimate of the movement of the 50 MA line. So we could put it out, let's say, somewhere around here. And here's today. So let's see how many trading days before we get to that level. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So that's 14 trade days, not 14 days. So that means it's roughly 3 weeks, and we will start making more money off of this additional share. So all we're asking the ETF to do is what it normally does when it comes down to the 50 MA line. And you could see here, this was back on July 20th when we were triggered, and This is an entire month later, so that's 4 weeks later. So all we're asking is for 3 weeks continuation, maybe a little bit more, and then we'll be making more money off of this add-on. So that's it. The numbers would work differently depending on the number of shares you have and the number of shares you add. I don't have that much leeway here since I only had 3 shares to begin with. So adding 1 share really changes things a lot. If you had many more shares and you added, so I added basically a 25% to the position, right? No, let's say I had 3, so I added 33% to my original position size. If you only add, say, 10% or 15% or 20%, you could get to more profitability after, say, 1 week out or 2 weeks out or something like that. Hopefully that makes sense to you. But anyway, I thought this was really interesting because I'd rather add to the trade and take a little bit of chance of making less money off of those original 3 shares with the higher probability of making more money if this thing continues on. So that's where I'm at with my swing trade with SPXL. Hopefully you found this video helpful to you. If you have any questions, just leave them in the comment section below. I'll get back to you. Hit the like button if it helped. If not, if you haven't already subscribed, please do so. If it wasn't helpful, hit the dislike, but leave me a comment. Let me know. I know I rambled on a little bit, but there was a lot to go over in this video, and also I was kind of thinking on the fly here. So anyway, as always, whether you're swing trading, day trading, or investing, go into every single trade with a plan. Stick to that plan no matter what. Honor your profit targets. Always take your stop losses, and in the long run, you should be green. Take care.